Hey everybody, Chuck Barone here, Thursday, October the 6th, 2022, from the hidden bunker today. Taking a personal day. I'm away from the office, but there's some stuff happening. I wanted to get a quick video out for you guys. As always, thanks to everybody for supporting the channel, watching the videos, all your likes and questions. Couldn't do it without you guys. We appreciate you. Today in the markets, crappy day, guys. It was just these markets. Not a great time to be an investor. Stock market down across the board. Not doing well with the interest rate news, gyrating wildly, basically on rumors and news every day changing. One day the Fed's going to pivot, the next day, oh my God, they're not. And the stock market just reacting with every little morsel of news. It's just crazy watching it. The market, you got to basically place your bets. Is the Fed going to pivot or not? If you believe the Fed's going to pivot, you play it that way. If you believe they're not, you play it that way. I'm in the not camp. I think they've made up their mind they're going to fight this inflation. World and U.S. economies be damned. We'll see. But at least as it stands, they're sure as hell talking tough. That's the way I would be playing it. The bond market today, another down day in the bond market after a rally the last couple of days. The 10-year sitting at 3.82%. Inching up. It was actually in the 9s, so it's still down a little ways, but inching up toward that 4% number. The 2-year galloping up 10 basis points today to 4.25% on a 2-year treasury. The inversion, it's narrowing down a little bit. It's down to 43 basis points. It was getting up to 50. That's still a pretty steep inversion. The bond market just showing how dysfunctional everything is right now. But 2 years is starting to look pretty good to investors, I think, at 4.25. We'll see how everything, like I said, every day is a different gyration depending on the news they're getting. We'll see where the bond market goes next week. Tomorrow is the big day, we all know. Today, the dollar rallying like crazy. Another monster day for the rally. Back up over 112 on the index. Smashing all the other currencies in the world to smithereens. I guess if you think those things suck with the dollar, imagine how bad it would be if you were converting pounds or even euros right now. Euros are under parity. Dollar the king right now, world currencies. Not so much against cream cheese, butter, and eggs, though, right? The dollar up today. Metals, meh. Gold had a small down day. $1,713.90 something cents per ounce. Silver silver unchanged, $20.73 per ounce. That's actually a pretty strong showing for metals in the face of the dollar going bananas again. So metals holding tough right now. Oil up today, $88.45 for a barrel of West Texas Intermediate. Of course, natural gas, $6.97 for their million BTUs. This is all OPEC plus. Got to get the plus in there now. OPEC-driven stuff with their cuts. I just kind of laugh at that cut. I got to figure it out because, their quota was, I think, 40 million barrels. They were only producing 38 million barrels. And if they're cutting 2 million barrels a day, are they cutting it from what their quota was down to what they're actually producing? Or are they cutting it from what they're producing down to producing less? Just the craziest, stupid stuff, right? Bitcoin today down small. The bad news for Bitcoin, though, is it broke under that $20,000 support number. I don't know, guys. Bitcoin, it just seems kind of blah right now, doesn't it? And news you guys need to hear today. Obviously, as we talked about, tomorrow is the big day, guys. It's the jobs report. It's what everybody's waiting on. The reason they're waiting on it is because it's going to kind of give us another idea of the direction the Fed's going to take. If the jobs report comes in real strong, shows wages rising, of course, that's going to kind of force the Fed's hand. If the jobs report comes weaker, shows the increase in wages slowing down, that gives the Fed a little bit of wiggle room if they decide they want to ease up on rate increases, but I just don't really see that happen. So tomorrow's going to be a very, very big day. Depending on what that jobs report is, get ready for some wild and crazy moves in the stock and bond markets tomorrow. today was the day, I guess, getting in front of that number tomorrow. We had the parade of Fed yo-yos out there, Neil, Cash, and Carey. We had Waller, we had Daly, we had a few other ones talking tough. Very, very, very hawkish on rates, insisting that the Fed's going to stay the course on inflation. I'm not sure if that means they really are, or if it means these guys are just out there doing PR work. We'll see. I mean, they're sure as hell sounding like they mean what they're saying, but you know how politicians are. Just because it sounds like they mean what they're saying doesn't necessarily mean that they do mean what they're saying, right? This was something interesting I wanted to share with you guys today. A lot of you aren't aware that the federal government operates on a fiscal year. They don't do a calendar year. So their fiscal year, their year ends at the end of September. October 1 being the start of a new year for the government. So next week, the Treasury is going to be releasing a lot of data about the national debt and the debt payments the government's dealing with on that national debt. And some of these numbers were pretty appalling, guys. The state of our government, what they're doing fiscally is an embarrassment. These guys this is the big crime here. Okay, they think they can just spend into the future, into oblivion, without any consequences. Well, the consequences are here. Listen to some of these numbers, guys. Total debt. Now, this is not accounting liabilities for pensions and Medicare and all the other stuff. Just the total debt treasuries out there. $31 trillion. $31 trillion. And the sad thing is, a lot of these treasuries are in short-term stuff they have to roll over. The Fed decided that when rates were super low, rather than sell 30-year bonds, which is what they should have been doing, they tried to grab a little bit extra rate savings to go shorter term. Well, now they're going to pay the piper for that. Listen to some of these numbers, guys. The White House at the beginning of the year said that the payments to the national debt would total $357 billion for the fiscal year. Halfway through the fiscal year, rates were starting to change. So the Fed came out and said that mid-year, they said the payments would total $441 billion for the year. Okay? Well, now they've released the numbers through the end of August, not counting the last month of September. And up through August, they've made payments totaling $471 billion on that debt. Now we're going to add in whatever the payments were in September. I'm guessing they're going to be higher because they had to roll over so much of that debt. They're saying that the total for the year could be at or over $500 billion. $500 billion just to pay interest on debt, on money that was spent long, long, long ago, and who knows what they were pissing it away on then. But now, when you're talking $500 billion a year in interest payments, how'd that one guy say, $1 billion here and $1 billion there, and pretty soon you're talking about real money. Well, 500 billion is real money. We broke it down a little bit further. They said that interests, interest rate increases are smacking the Treasury hard because now all the debt they're rolling over is rolling over at higher rates. Projections show that the interest payments on the national debt could go over $1 trillion by 2032. Now that sounds like a long way into the future, but it really isn't, okay? We're talking 10 years here, a doubling of the amount of payments the Fed, the Treasury, our government is going to have to make just to service the debt. $1 trillion a year, it's fucking crazy. Excuse my French. Now, hopefully Jay can edit that out. We're talking $3 billion a day in interest payments on this debt if it gets to $1 trillion. We're at $1.5 billion a day already. Just the craziest thing ever. I think that it's time now to start shouting at these politician guys, girls, whatevers. This is getting out of hand here, guys. And this kind of situation, this does not look like it's going to end well, man. We're not doing anything to slow the debt down. We're not doing anything to stop the borrowing, even slow the borrowing down. It's contagion from the top, federal government, all the way through the states, municipalities, even the personal debt, everything sitting at record numbers. Here comes the blow-off, guys, okay? And here's another thing I hated. I just wanted to tell you guys about this today. I was reading that more and more people now are accepting car payments over $1,000 a month. $1,000 a month for a car payment. They said in the last quarter, third quarter of this year, almost 15% of new car payments over $1,000 or over. Further sign of the apocalypse, guys. People are out of their minds. Who pays $1,000 a month or more for a car? It's just bananas. It's crazy. The total now, the new car price, average new car price, just under $46,000 for a car. At these interest rates, guys, people must be crazy taking these payments like this, man. People have no, I guess, when the government has no respect for money, it trickles down to the people, and people have no respect for money. This is just craziness here, guys. Anyway, that's it for the day. We love you. We appreciate your guys' support. I'll be back at the office tomorrow in my usual place with a little bit nicer dress. I appreciate you guys' patience and support. Big day tomorrow. We'll have a lot of details, a lot of interesting stuff to go over. As always, if you like what you're hearing, hit the like. Double check your notifications, guys. A lot of people are telling me they're not getting notified. Their subscriptions are getting erased. Take a look at your stuff. We really appreciate it. Huge day tomorrow. Talk to you then. Thanks.